This is the price of gold in US dollars for 1 year. It's 1 ounce gold, down $74. This is the price of gold in euros, up 222 euros in that same year. So now, did gold go up or did it go down? Or did gold just keep its value and the underlying currency that we're measuring it against, the fiat currency, went down or lost its purchasing power? You might say, well, if I bought gold a year ago, I'm down $74. Yeah, that's true. And this is where a lot of people get it wrong. I've been listening to a lot of financial talking heads talk about how gold hasn't been performing well as an inflation hedge. Same argument is made about Bitcoin. But to really understand this is really two keys. One is you have to stop thinking in terms of the US dollar, and two, you have to zoom out. Now, to understand this, I used to tell this story about how cowboys used to buy shots of whiskey with a bullet because the silver in the whiskey, however much weight of silver was in it, was worth about 25 cents, which would be equal to the price of a shot of whiskey in those days. Now you fast forward to today, that same amount of silver in weight is equal to about $8, right? Because whiskey went up, and now you can buy your shot for $8, right? For that same amount of silver, and that's where they got the term shot from. But in reality, I looked that story up. It's not true. It's kind of a legend, but it's kind of the right idea. So I thought it'd be a cool idea to look at this in terms of iPhones, something everyone understands, right? So if we look at 2007, when the original iPhone came out, the Gen 1, it cost about $499 at that time. This was the latest and greatest technology at the time. 2007, a gold coin was worth about $642. That's a 1 ounce silver eagle there of bullion. So with that one silver eagle, you could buy one iPhone and have about $100 left over to go out to a nice steak dinner. Fast forward to 2021, gold is now $1,700 for that same 1 ounce coin. The latest and greatest iPhone, the latest and greatest in technology from 2021, now is going for $799. You can buy two of them with that same gold coin. So for that same gold coin, you can buy two iPhone 12s and still have money left over. When you think in terms of gold, it's really eye-opening, right? So if we up the ante a little bit and talk in terms of cars, here's a 2007 Toyota Camry, at the time worth about $20,000, and that's going to cost you about 31.1 gold coins, because if you remember, 2007 gold was worth $642, so it's going to cost you 31 gold coins. Fast forward to 2021, you get the latest Camry. It's now $30,000, so $10,000 more. The price inflated, $10,000. It's only going to cost you 17 gold coins, which is half the amount that you paid in 2007. So in this scenario, which would you have rather held during that time, dollars or gold coins? See, when you think in terms of when you price things in gold coins, it's eye-opening, and you can see how inflation really robs you. This is what I mean by you have to zoom out and you have to think outside in terms of the dollar. Then you start to see where gold, precious metals, Bitcoin, things that are outside of the debt-based financial system, where those things have a place in your portfolio. And then also the small fluctuations and moves, because we know gold is highly manipulated, Bitcoin's highly manipulated. I used, for the pricing here of gold, I used the spot price, but the physical has a premium. It's usually $100 premium per coin, and they're also harder to get. And then when things get dicey in terms of the economy, you see the prices of these things start to skyrocket. So I saw this article today that kind of backs up the Bitcoin as an inflation hedge. Finbold put this article, UK investors turn to Bitcoin as the British pound weakens, new data shows. And you can see a spike here in September. This is people buying Bitcoin with the British pound because they want to get off of that sinking ship. Bitcoin volume with fiat surges. Besides, the pound data shows that major fiat currencies have recorded an increased trading volume with Bitcoin. For instance, the volume against the euro has also spiked 84.84% in the last 30 days. At the same time, volume for USD BTC pairs grew by 66.52% in 30 days. And I love this quote here. Based on the performance, Butterfield noted that when a fiat currency is threatened, investors start to favor Bitcoin. We've seen this in Africa, and we've seen this in Venezuela when their currency started to hyperinflate. The shift to Bitcoin comes amid fears that the new British Prime Minister Liz Truss's proposal to increase government spending or government borrowing to pay for tax cuts will worsen inflation. The situation sent the pound to historical lows, with the Bank of England forced to issue a statement of reassurance. With Britain's citizens turning their attention to Bitcoin, the scenario partly validates the notion by proponents that the cryptocurrency can act as a hedge against inflation. Now, I used to say Bitcoin was a hedge against inflation. I don't say that anymore. What I say now is Bitcoin is a hedge against hyperinflation or fears of hyperinflation, because as we've seen, Bitcoin is manipulated. It also trades just like any other technology stocks now, because it's pumped and it's dumped by different people, but that doesn't change the fundamentals and what role it plays in your portfolio. We know fiat currencies are failing because we see it here with the euro, the number 2 currency, world currency, next to the US dollar. We can see right here, this chart proves that the currency is quickly losing purchasing power. Even though the dollar seems to be doing better, it's not. They're all falling together. It's just that the euro and the other currencies are falling much faster than the US dollar is. So it kind of looks like it's doing better. It's the cleanest shirt in the laundry pile, you could say. So anyway, this is all just food for thought. Thanks for watching and have a great day.